Okay, so can you see this is our first target? And as we reach here, what do we see here? This one here. Okay, what do we see here? I told you this is an anomaly because this bar and this bar, which bar is more greater, this or this bar?
Last one.
The last one. But how about the volume?
Lower.
Lower. So we have an anomaly between spread and volume, right? There is a anomaly between price and volume, as I told you. So this low volume, this bar is known as a fake bar. What is fake momentum? Got it? So it shows that there is a seller and it is coming right on the which point, which reference point? Selling climax point. Can you see? Spring point.
Yeah.
It is coming right on this spring and selling climax point. Got it? So we have a right reference level, we can reverse it. And which is the last high, which is this AR line. Now it's defined obviously. After this point, our last high was this, right? AR point. So what we can do, we can trade another one right over here if you want. Okay, place a stop loss right below this one. Okay, it's all right. And our target would be this one. You see how much we made? 2.92. So in just short amount of time, you made how much? How much you made? 6 hours from here, 6 hours from here, 2.92 hours from here. Got it? And then as we go up to the AR line, okay, what happened? What do we see? First of all, notice this bar. Volume is decreasing as we go up. As we go up, what happens? The volume is decreasing. Can you see? As we go up, what happens to volume? Decreasing. Am I right?
Yeah.
So it means the buyers are not strong. And second thing, you notice this one. This one here, right? Okay, so this is exactly what we say as no demand. Am I right? No demand. Right? And this is what?
Yeah.
This is what? This one. Hidden upthrust. Right? This is upthrust. So we can take a position right over here. Because if we take here in this position, our stop loss would be last high. So we don't know it will be very, very high, right? But if we know, if we take a position right over here, we know this would be our last high, right? So we take our stops here and a take profit would be the last low, 3.17. Got it?
Yeah.
Right? And as we are coming down, you can see, right? There is no reference point. We're coming down. And what do we see as we break through this on? What do we see here? No demand. Okay. So the volume, as we are coming down here, what happens to the volume? The seller's volume decreasing. And we see a no demand at the end. The price rises, and then we see a no demand. You got it? First of all, this no demand, you can see right at this point, intraday low, no demand. And then second no demand came over here. Sorry, no supply, not sorry. I should say no supply. First no supply, second no supply. And second thing, as we are going down towards the breakout, what is happening? The volume is decreasing. Can you see? The seller volume is decreasing, right?
Yep.
Right? And now after this, what happened? The price reversed here. So this is what do we call here? The price reversed here. Because at this point, we don't know because the price may go further down, we don't know. But when the price reversed over this point and the volume is increasing, you can see the volume ticked up when the price reversed. This is what key reversal, right? You see, increase in volume. This is key reversal. So this is what we call it as key reversal, and it is also what? Spring. Got it?
Yes.
So what happens? This is another buying position. We can buy again. Okay, and if you buy from here, you already know. And second thing, if you notice one more thing here. Now this was the first lower high was observed from here, right? All right, and if we try to draw the channel, right? And then we know that here as well. What do we notice here? Shortening of the thrust. Can you see? And if you draw another channel, if you want to revise it, for example, we want to define the channel again. If this channel is too big, right? We can also define it. Can you see from here? This one to here. Let's join this one and this one. Okay. This is obviously is overbought. Now you see how everything makes sense and reversed. Can you see?
Yeah.
Right? Okay. So this is how we're gonna just analyze. This one and this one, and sorry, I have to join this one. If we join this one and this one too, this is the middle point, right? And this is what oversold. Okay, and oversold, after oversold, the price remain oversold and then reversed. Finally from there. You see how the price is coming up this oversold line as well. You see this kind of value, right?
Yep.
Got it? So we can take a position right over here. And if we take a position on this key reversal and spring, and this is what also, this has a third characteristic as well. We call third characteristic, which is key reversal plus spring plus oversold, right? Three characteristics here. And then we can just take a trade right over here. Place a stop loss would be last low, which is the last low. This is the last low, right? So just below our last low, and a take profit would be the last high. This one is the most visible high. After breaking this channel, our last high would be this one. So we always target horizontal highs and lows. We do not care about these trend lines, right? Trend lines, right? We always target. So after breaking this channel, our last high would be this one. Am I right? So we will take a profit
Okay.
up to this level. That's 3.7 hours. So you see, in just how many minutes?
Okay.
In just we can see in we started at 9, right? No, 9. This one. 9 to 11. So it's just like in the window of 4 hours, we almost made around 20 hours. But I'm not suggesting you, I'm not asking you to trade all like 4 hours together. I'm just telling you that you in just like the first 5 minutes, you can even make your trade, right? You can even reach your profit. Okay. So let's go for the gold analysis now. If we go for gold, the same thing we would do, as I told you. First, go to the 15-minute time frame on gold. Okay. Now you have to tell me when was the London Open? Oh, sorry, New York Open. New York pre-open time. New York pre-open time was 8 o'clock your time, right? So
Yeah.
8 o'clock is this one. This is New York pre-open, and then New York post-open was 9 o'clock this one your time. So these two. Okay, and Asian close was, when was the Asian close? Sorry, Asian Open, 3 o'clock, right?
Yeah.
So this is Asian Open. Now, can you mark it high and low? Now, let's suppose you are here, and this 15 minutes before you are here. Because if you see the time here, this is 15-minute time frame, you are here. If you see the time here on this horizontal low, you can see this is almost like 15 minutes, 1945. Can you see? 20 May 1945.
Yeah.
So that's like 7:45 your time. So this is the, we are here. So can you mark the high and low? Obviously, intraday high would be this one, right? We call this London intraday. Okay. Stop. And this one, 3 to 8. Okay. How about the low? Just moments here. Our last significant low over here was this one, right? This one, right? Because we are analyzing a trade. Right? So this is what? Okay, this is the point, which 9:45. So before this point, what was the lowest point here? Before this point, 9:45. This one was the lowest point, right?
Yeah.
So what we call it this as? London intraday low. Okay. Sorry. Okay. Now what we're gonna do? Can you draw the structure here? This one was the first high low observed within this range before London Open was this one, right? So if we draw a channel from here to here, okay, and we go to the 5-minute chart and refine it. Okay, we refine it. Now we can refine it from here to here, this one, right? What do we see here? This is what? During London Open, oversold, right? And we are rejecting what? Intraday low. Can you see that this?
Yeah.
Right? So what? It's easy, right? We can just target it like this and target for 2 hours. Okay, this one. Right, 2.5. Why would I close my trade right here? The reason. Because as we are going up, you can see as we are going up and trying to reject, are we observing the jump across the creek? No, you're not observing. What are you observing? Effort versus no result. Can you see? Effort versus no result. Effort versus no result. Can you see? Small bars. So this is not jump across the creek. So we will not cut down our trade. We have to stop our trade. Okay. So now we have 2 reference points. Okay. This one here, and this is effort versus no result. The price failed here. Can you see here? Just try to observe these bars. How it's closing. Jump across the creek is not like this. Okay. Jump across the creek, close on the high and increase volume and increase spreads and the volume also increase. But you see how these bars are getting smaller and smaller, and see the volume is getting bigger and bigger. This is what? Spread is getting smaller and smaller. Effort versus no result, right? So this is not jump across the creek, right? This is effort versus no result, right? Okay, and then the price reversed here immediately. And after the price reversed here, what we call it this as, right? Our last high was this one. This was our last major high, right? So can we say this was actually an upthrust of this one, of this last high? Yes, right? And then once we come back and retest it, what do we notice here? The bar is very huge, but see the volume. Can you tell me the volume? The volume is very low, right?
Yeah.
The bar is huge, volume is low, so this is fake momentum. There is an anomaly between the spread and the volume. Got it? So this is fake momentum bar. And in the fake momentum bar, we can enter a trade here. A stop loss would be here. All right. And a take profit would be this last low available, this one. We just, so that's 2.46 hours. Got it?
Okay.
Yeah. And then what do we see here? Again, the price reversed here, right? But the thing is, if we place a trade here, our stop loss would be very, very huge. So this will not be the optimal target for me to place a trade because there's only 1.29. Got it?
Yeah.
Target is very low, right? And after this reversal, what happened? We wait and we wait for the test here. And what do we see here? The price immediately reverses from here. The price failed. The price made this high, and the price also made this high. Got it? So the price failed from here. And you can notice one more thing. If we refine the channel here more, we are in what? We are in a overbought position or not, right? What we can do, we can connect this. For example, now we have already traded this, right? Okay. Let me define it. If I want to define it, well, how will I define it? Now I can join this point and this point. Okay, and now my low would be this one. Okay. Now we are still in a downtrend. We can say we are in oversold position. But if this oversold, we cannot place a trade because our take profit target was very low, right? Got it? So when we reverse, now what happened? The take profit reverse again, and then came back, retested here again, and the last high was this one, right? So we can take our trade this one like this, place a stop loss here, place a take profit right away here. But again, see the risk reward to risk ratio. 2, will you take it? It should be more than 2. I will not take it. Got it?
Okay.
And the second thing, and I told you one more thing. You see this high volume. When told you when the price is testing this area, the volume of this one should be lower than this. Am I right? If it's higher, then it will be retested. Do you remember?
Yeah, remember.
Now here, we made a high volume than this bar. So obviously, this volume will be retested. Now here, this volume and this volume are almost equal, right? So of course, this will be retested. Got it? So we have no choice to, we do not have any choice, right? We will wait again for the retest here. But what do we notice here? The price failed, right? The price went high. It did not reach this high. It failed here with a very, very high volume, right? And see where it is closing. You see the closing point? This is
Yeah, on
extremely
low.
bearish, right? It is extremely bearish. Got it? Okay. And then we have a, now what do we have here? Now, if we draw another one, if you refine it, now what can you see? You start seeing another, as you see the channel, right? You start drawing the channel. Okay. Now you see exactly how it's coming on. Rejection. So this intraday low is failed because this testing has failed, right? This testing has failed. This testing has failed. Got it? And now we have this one, high position. And the point is, can we take this trade? Where will we exit? That's a problem. Our last low was this one. Okay. But the problem with this is too high. The stop loss is too low. And if we target this area right over here, our risk reward ratio is 1.56. So we will not take this trade. Got it? But here, once we come to and retest this area here again, what do we see? No demand. Am I right?
Yeah.
No demand. Our stop loss goes over here. Now I try to place my trade and just like okay. All right. Again, what do we see? We could not see any trade, right? So we only took one trade only during this time, and all this time it's very difficult because we are not getting the optimal target. Okay, our risk reward to risk ratio is very is not in our favor actually. So we are gonna miss this one. But as we go down, as I told you that this is about that. Now you notice one more thing. If you draw a new channel from here to here, we have finally reached the highest volume ever. Can you see? So you can take small trades, obviously, you can cut down your stop loss. But as I told you that if we are doing one more mistake. You didn't tell me that we are doing one mistake. What kind of mistake we are doing? Can you tell me the mistake we are doing here? We are analyzing on, we are doing entries on 5-minute chart. We have to go to 3-minute chart. We almost forgot.
Oh.
Right? Now you see?
Yeah.
Now I see here effort versus no result right over here on this point. Can you see on the high?
Yeah.
Now this is the point where we can take our trades very easily, because we are analyzing, we are taking the trade on 5-minute chart. We have to take a trade. Now last low would be this one here after breaking this one. This is our last low right over here. See? And it is what? 3.51 hours. Make sense? And if we also miss this trade, that's fine. If we can also miss. Now here we can take another entry. Stop loss, last high, right over here. This is what? No demand. Can you see? Small spread. No demand. And now again, we can just target our last low. This one. But here, it was only 1.44. Okay. So this would be our best targeted to take an entry. Got it? And why this would fail? Why will not take a trade right over here? Because the volume of this one and this one is equal. I told you but the testing volume should be lower than this. Got it?
Yeah.
So, well, okay, there will be increase in volume. The volume should increase, but the volume should be lower than this selling climax. Got it? Whenever we are testing the volume should decrease. But what happens? The volume is actually same. So we cannot take a trade, right? Got it?
Okay.
Any questions?
No.
No. But here you see, we have increased volume and this is testing. F versus no result. This is F versus no result. Can you see? But you see the volume of this this F versus no result, the volume of this is smaller than this one, right? This is what? No demand. This no demand volume is smaller than this one, right? This testing volume. But how about this one? The volume is equal. So we cannot take a trade, right? That the testing volume is greater. So if we can take a trade here, now once we are taking this trade, short trade here, we're gonna win this trade, obviously. And now as we are going down, what do we notice here? We can refine a trade channel. Now, what do we see? The price finally broke intraday high and low. If we just see here, jump falling through ice. Can you see? FTI falling through ice.
Yeah.
Right now we can draw a channel from here to here, as I told you. Oh, sorry. Right? From here to here, this is the intraday low, and what do we see here? Oversold. Can you see?
Yeah.
Oversold, and after oversold, this is oversold plus selling climax. This is what? Automatic reaction here, right over here, automatic reaction here. This is what? Secondary test, no demand, we can take a position here. If another one, higher low, we can take another position here. And obviously, if you are taking a position here, what is the next horizontal level? This one, intraday low is the next horizontal level, right? If you take a trade right over here, let's suppose this is effort versus this is F versus no result here. So our next target would be this horizontal level, right? This one, right? 4.73. And if we take a trade right over here, this one here, our stop loss. But the problem is we don't know where to place our stop loss. If we take our this one, right? We don't know whether we should place here, because we don't have a low. So we will wait for this candle to close over here, this key reversal. And now we have a clear stop loss to place, right? Are you getting the point?
Yeah.
So now our intraday high would be our next level of support. Now, why do you exit here? Because this is the next horizontal line. This is what axis line. What happened? As the price is going towards the axis line, what do we see? The price is making higher high towards the axis line. So this will be a successful breakout. Am I right?
Yeah.
So the breakout occurs here. Now, if you draw from here, because our next higher low was observed from here to here, right? This is higher low. And now if you draw the channel and extend it like this, we don't know where would actually right, but we clone it right now. If we clone it, we're going to join a trade right over here. And you're going to see we start observing what? Overbought, right? The overbought completed right over here when the price broke into the channel again. And then the price came back, made the first higher low, F versus no result, right over here, F versus no result. So you see, I tell you, this one is what? Overbought plus buying climax, right?
Yeah.
Okay, this one is what? Automatic reaction, right? Of course, this one. This one is what? Secondary test. And this second test has what? Can you tell me? Lower high characteristic. Well, I told you, whenever we have a lower high on the second test, we draw another line, right? Like this, right?
Yeah.
And then what do we see here? This one. Very small spread bar. A little bit increase in volume. That's effort versus no result. And now we can place our stop loss right over here, and a target would be this down. So, but because we are already closing at this time, it's already a market closing time. You see, the New York
Yeah.
session is almost closing here, so we cannot just like pull our trade right. You see, After this session, as the New York session closes, what happens? The market becomes choppy and choppy. There's no real movement in the market.
Okay.
Got it? Yeah.
Yeah.
So we can just, if we just take a trade here, let's suppose here, our last high, this one, last high, stop loss here, then we are making 3.81. Okay, but here the New York session is already closing at 12 p.m. your time, so means the market is already closing. So we just have to shift our position. All right, we have to start closing. Got it?
Okay.
So do you understand how we trade?
Yeah.
Yeah. Okay, then we will continue in the evening now. You can go. I will explain you more about this New York session strategy. Okay, so and then you will get an idea about how to do it step by step. Okay. So
Okay.
I think you have to
Sure.
visit your mom. So bye-bye.
Yeah. All right. Thank you.